Hey guys, Julian from J. Lewis Trading, and this is the audit for the week of the 24th. So, if we were to quickly review what we were looking at last week, I was mentioning that the SPY as a whole was looking to potentially move to the upside. I did mention that there were some downside levels that could be touched and taken out based on some macro stuff that's out of our control. But I also did mention that if it did tick to the upside, that we could see a potential fill or full retrace of price action when it came off of this 240 high. You can see that price action moved back. This is a couple weeks in the making, and we last touched base on this day. Price action gapped up on Monday and started to work its way back up to that 240 level, and we made it almost about half of the way there, and had some mixed trades over the week. Now, on Monday was super interesting. There was this huge gap up, and price action trended sideways, and there was absolutely nothing to trade. So there's nothing to report in terms of a trade on Monday. I was on the sidelines waiting to see what was going to happen, and I sat tight and waited until Tuesday. And on Tuesday, what I did was I bought some calls, not right out of the gate, but about an hour into the session. We can see that we again had this gap up. Price action moved up, pulled back, and created this flag. And this is where I started to get long right through here. And as soon as it broke that apex right down through here, it did move up, but then more or less trended sideways for the day. So I took an aggressive entry point on this flag breakout. Nothing really happened until later on in the day when we had this area closed on, and you can see that it took out this resistance level. Pardon my computer here. It took out this resistance level of 238.75 right here, and this 5-minute bar closed to the upside. But you can see there wasn't a ton of momentum in the uptick buying here. So I got out of this position. I did do okay because remember I was buying down through here and let go of this position up here. I was buying calls on that intraday position. I had a 27% return on this particular trade. So nothing too crazy. Again, this was very challenging to sit through because there's nothing worse than sideways movement. So that was my Tuesday trade at a 27% return. I tweeted that and put that out there that that's what I was doing on Tuesday. And then we were obviously in cash by the close and waiting to see some action on Wednesday. Another positive trade on Wednesday. I was buying some 239 calls, obviously going long, and I was buying right through this area, right through here. So again, just after 11 o'clock, I waited for the market to warm up, give me some insight as to where it was going, and I actually was buying here prior to the breakout, and just this was sheer luck. This was a huge candle, and what was interesting about this particular setup was that I actually, when I bought this candle right here around the support line, I actually set a bracket. I typically don't bracket. I do on occasion, and this was one of those special occasions. But I was in, and I had my profit target already set, and that was honestly because I left my computer and I wanted to take advantage of this move. So this 5-minute bar represents more or less the entire movement of my position. I held this for about a sum total of 10 minutes, and on that particular trade, I had a 24% return on my 239 calls that I was buying. So again, not too bad of a trade on Wednesday. Thursday, the market got a little bit tough, a little bit bearish, and I was looking to get some stuff on the short side, and I was picking up 238 puts on Thursday, and I didn't play this properly, and I'll tell you exactly what I did. This drop right here and bump gave me, again, that's a bear flag, and I was pretty stoked on this, and I bought this breakdown right through here, and this is the problem, is that I had a profit target that I was looking for that right down through here on this lower wick was off by a penny. So on the options that I was buying, the ask went to where my target was, but I was obviously set to trade out at the bid, and so I actually missed my sell target or my profit target by 1 cent. And so I honestly thought that it was going to come back, and as it rallied through here, I thought, okay, well, this is just going to be another bear flag, and we're going to continue on to the downside for the rest of the day. This is a really poor drawing, but you get the idea. And it had this rising wedge, and I thought there is absolutely no way that this thing is going to rally. This is one of the most bearish short-term patterns out there, and as soon as it started to crack to the downside, that gave me confirmation that this thing was moving. And to be completely honest, I was not paying attention to this right here, which is bullish divergence. You can see that the momentum was coming up as price action was coming off. This rising wedge broke down. It was a complete fake. It rallied so incredibly hard, very, very fast, and I was stopped out of that position, and that was my only loss for the week. If we fast forward to today, being Friday 28th, last session of the week, we there was two positions that were taken here, and two positions. I'll show you what was going on through here. So my first position was I was waiting until around 10:30, 11 to get into a situation right down through here on the bear side. So I was looking for an entry off of this action right here. Again, bear flag. This is like I trade these all day long on the SPY. It's my favorite, most simplest situation to get into. You can see that again, rising wedge thing popped down. I was in this. I surfed through this rally. I was in through here. Now, because it was expiration day and I was buying options right out of the or that were sort of right in the money, they were really, really, really volatile. And what ended up happening is on this rally right through here, which I thought was total garbage, I ended up getting sort of close to where I bought these things, and I honestly thought that price action was fully going to go against me. And so right as price action got up through here, I was at about break even. I was a couple bucks in profit, literally a couple dollars in profit, still a positive trade, but the actual monetary side of things, it was just a little bit better than break even. But I did let go here because this rally I really bugged me, and I got a really bad feeling about this rally. So I sold up through here, and like I said, I did walk away with a little bit on that trade. Now, as soon as it started to break down, especially down through this this level right through here, I started getting a little bit more bearish again on this situation. So it started to come off. It came down. Did this sort of three bar bull move, and I got bearish again right through here. You saw this little bit of a pin bar right here. So I cut some more puts, and I took them down to here. And surprisingly, the move from here to here was a simple 20% return on the puts that I bought. I bought the same 238.50 puts on that day, and I took that short. And on that one, I had a 25% return. I think it was a 20% net return after commissions and whatnot. And that was my trade, my secondary trade on Friday. So on the week, the way that the stats read is that I had 5 trades. 4 of them were profitable. My average loss, which was only on one trade, was a bit high at 19%. And that was 19% of my option value on that one trade. Again, 4 profitable trades, 27%, 24%, just over 5% on the one that I broke even on ish, 25%. So over the 4 profitable trades I had an average return per trade of 19.75%. And I think on the overall week, I had something around a 60% return on the size that I was trading on the week. So not too bad of a week. 5 trades, 4 profitable. I believe that's about an 80% success ratio on the week. And average loser was about 19%, and my average winner per trade on the 4 profitable trades was 19.75%. So decent enough week. I'm not trying to call what's going to go on next week. Obviously, I'd like to see a real strong bearish move to the downside. That's just me. I'm a bit of a perma bear when it comes to trading. I do have a preference to watching stocks fall apart, because when they come off and they come apart at the seams, they really move hard to the downside. And I love puts. I mean, I'll trade calls all day long, but if you give me an opportunity where I can take some calls to the downside, I will absolutely do it. So that is the audit for the week of the 24th. And again, 5 trades, 4 profitable, 80% success ratio, average loser on the 1 loss, about 19%. And I was just shy of a 20% average on the 4 trades that I was up on the week. Anyways, this is Julian from J. Lewis Trading. Don't forget to follow us on Twitter at J. Lewis Trading, and visit us at the J. Lewis Trading Facebook page. And don't forget to subscribe and like us on YouTube. Thanks for joining.